but I have serious concerns about the actions you've taken with respect to the secondary market facility with respect to junk bonds. In response to Senator Sass, you emphasized that, at least with the TALF program, you were essentially helping those with AAA ratings. But when you look at the secondary market facility, you have purchased junk bonds, and we have this strange situation where the same day we had unprecedented damage in terms of unemployment numbers, the stock market was in fact going up. And you pointed out that most of the people being hurt are those earning less than $40,000 a year. In fact, 40% of them have lost jobs. And it's not clear to me why putting money into junk bonds is helping folks on Main Street. In fact, it puts the public in a first loss position behind even the most subordinated bondholder, and uses public funds to take on years and even decades of future cash flows with the price risk. Can you respond to that concern?
Thanks. I'd be glad to. So the only high yield bonds that we can buy are those of companies that were investment grade on March 22, but that have been downgraded, so-called fallen angels. These are some, in many cases, very large U.S. companies with many, many thousands of employees. And we made them eligible for the investment grade for the primary market corporate credit facility. And we don't want to have a cliff there where the investment grade markets are working well, but the leverage markets are not, non-investment grade markets are not. So we made a very limited, narrow set of actions to support market function in those markets, including buying ETFs, exchange traded funds. That's a portfolio effect, and that's had an effect to improve market function there. We may have to be lending money to those companies, but even better, they can borrow themselves now. And that's a lot of that has been happening, and that's a really good thing. So that's kind of why we did it. And it's a fairly narrow intervention. We're not buying junk bonds generally across the board at all.
Mr. Chairman, if I could just follow up briefly. I think a lot of those bonds were already in trouble before the intervention, and their trouble was not directly related to the pandemic. And if you could get back to me and just show me where the Fed has the authority to purchase this kind of below investment grade instruments, I'd appreciate it. Thank you.